Welcome back. You're watching Big Deal and we are discussing the Ghar Wapsi momentum in the startup universe. Now, Mehul, we were discussing, we do know that Gift City, IFSCA, has now come up with a committee to really look into this particular matter. Of course, in Gift City, only fintechs can be transferred, if at all. What do you have to say about the Gift City structure for a quick onshoring, even though it's an offshore platform? Is it the same as onshoring on India? What could be the difference?
I think what we need to understand is that, Gift City obviously provides a good platform. The companies that get incorporated there are treated as offshore companies, so they are effectively treated as foreign companies. So foreign exchange regulations don't apply to them. There are tax concessions given to those companies as well. But, in a typical flip structure, what is very important is that the shareholders, the founders, the promoters, the key employees, they are all outside India because because from all kinds of perspective, whether it is tax perspective, POEM, FEMA, the general advice that was given was that they need to be outside India, or they need to be residents outside India, both from a FEMA and tax perspective. Right. Now, Gift City does not enable that because the individuals still remain residents of India. If you move to Gift City, you don't become a non-resident, and therefore, that whole aspect needs to be figured out. Also, let's say if you are in Singapore or any other such jurisdiction, dividends, capital gains, they are exempt. Now, again, in Gift City, if you're a shareholder, those dividends, capital gains are not exempt. So, again, those issues, hopefully the committee will look at that and come up with answers.
Right. So, Dhiresh, practically, from the point of view of Meesho and many such aspirants who want to reverse flip, what are the biggest issues? Is tax inefficiency one of the prime hurdles?
So, Nisha, there are a few issues. I think Mehul mentioned some of the tax issues, but there are other things as well. So, for instance, on Indian bourses and overseas incorporated companies not allowed to list, whereas that is possible in case of many other exchanges, be it US, Canada, Hong Kong, etc. So, if, for example, there was a structure possible where companies which are incorporated outside India but have, let's say, a large portion of their assets, revenues, employees, all kind of based in India, be allowed to be listed in the Indian exchanges. That could be another way around, solving this problem. And there would be many such solutions. But I would say, I think tax is one aspect, but there would be other solutions which might be possible, which do not kind of change the revenue of the government, but still kind of end up achieving the same outcome for players like us.
Right. So, Siddarth, what is the wish list from the government in terms of support as well as dispensation? And are they aligning with it?
I think the wish list from the entire industry is to ensure that from an operational perspective, there is no difference that happens from operating in India or Gift as opposed to operating overseas. I think one of the biggest concerns of the industry from an operational perspective is the fact that a large amount of the billing actually happens to an automated fashion, and a majority of the income also comes from overseas sources. There are people in the US, Europe, Australia, etc. Unfortunately, due to Indian regulations, it's very, very hard to have a payment gateway that can accept money in USD in an automated fashion. You still have to go and actually submit a physical invoice, give them transfer instructions, source the bank account details, and a large amount of stuff. So if this inefficiency and friction actually goes away, I think it'll make it a lot more attractive for these startups to actually end up coming back to India itself. From a tax perspective, also, Gift City actually had a fantastic change in 2021, where they said that in case you're an India-focused fund, you can actually redomicile back to India, to Gift City specifically, in a tax-free manner. If a similar kind of scheme has actually been extended out to Indian startups looking to come back as well, I think that'll actually be a fantastic shot in the arm for the entire initiative. Because if we look at it, I don't think every Indian startup can actually be like PhonePe to pay $1 billion in taxes to actually redomicile back to India. So a tax-free fashion to actually get them to come back will actually go a long way in actually making this a lot more attractive. Some of the other elements such as tax, etc. I think one thing that's actually weighing on the minds of investors from a tax perspective is if the majority of your business actually arises from India, and this is due to the Vodafone case that actually happened. A majority of your business or assets or the value of the securities resides from India. Then no matter where you're domiciled, if you actually transfer securities or you sell your securities, tax is actually payable in India.
Yes.
So for all these Indian startups who are actually domiciled overseas, but the majority of the business and the value of the charge derives from India, if they do list overseas, this is a potential tax, a tax sword that actually hangs over the heads of everyone. If they move back to gift, or they move back to India, mainstream India, mainland India for that matter, that won't actually apply. So these are the factors that people are actually looking at. These are factors that the government has also appreciated, and there is actually deliberations that's happening across all levels to figure out a win-win solution to get Indian startups to come back home and to allow India to benefit from the kind of IP and the value generation that these startups are actually creating.
That's right. Owning our own innovation, IP, as well as data, that will be a big thing. That could be the pull. But is it an opportunistic aspect also from the startup world is what probably the government will look into as well. But Mehul, what is your reading on this? What are the teething troubles in terms of tax aspect? And in your view, can a dispensation be given? Because the transfer pricing aspect is also there, where any sale of share in an overseas jurisdiction for the assets inherently lying in India is going to be taxed in India, and that the Indian government has been extremely strict about. So Mehul, how do you read into balancing of this tax aspect as well as owning and onshoring our own innovation?
Yeah, I think, absolutely right that there is an indirect transfer law, which after the Vodafone case came into play. I think the ask seems to be, if you are an overseas entity, can you list in India? Probably the answer is no. So then can you flip the structure in such a manner that your overseas entity is not your holding company, your Indian company becomes your main holding company, and then your shareholding also gets offshored into that Indian company. I think that is the thing that people are looking at. Of course, there could be some tax issues, and therefore Gift City is an idea. Of course, it's limited again to fintech. The transfer pricing thing which you mentioned is interesting because a lot of startups, when they flipped overseas, some of them also sort of relooked at their business model, their transfer pricing model, and more profits, etc., were then ensured that they were parked overseas, because that is your vehicle, right? So you need profits over there in order to make your listing over there attractive. Now, when you re-domicile back to India, do you then go back to a transfer pricing model which is cost plus or which is more focused on profits in India? So do you change that? Again, that becomes a interesting thing. Again, as per an Indian tax laws, if you change the transfer pricing model, there is also an exit tax. So all those issues. Even in overseas, we are talking about Indian taxes. But when you flip the structure, and if your structure initially set up, let's say has a holdco in the US, for example.
Yes.
And if you want to flip it back, then there could be taxes in the US. And how do you deal with that? That also becomes a big challenge.
All right. So lots of challenges in this. Not an easy structure at all, and government dispensation will be very required. But an example has been set by PhonePe by paying over $1 billion of tax to reverse flip. So given that, whether the government will proactively give support to the rest of the startups needs to be seen very, very carefully. But of course, our panelists here have been working tirelessly with the government on pushing the Ghar Vapsi agenda as well. Thank you so much, Siddarth, Dhiresh, as well as Mehul, for joining in this conversation. It will go on. Lots of developments on this front is likely to happen soon. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.